The single biggest mistake that investors make with buying commercial real estate is that the property is over-leased, which means they pay too much for the property. What I mean by over-leased is that the previous owner goes and gets a tenant, they pay a big incentive, so they give the tenant money to move into the property, and then as a result of that, they push the rent up higher than what the market is. When the rent is being pushed up higher, it means that the return on the property is higher, and subsequently, commercial property is a factor of the return, and then the value of the property goes up. I've seen this anything from a $500,000 property up to hundreds of millions of dollars of commercial property, which are bought by fund managers, and the fund managers don't do their due diligence properly, and the property is over rented. It's being rented at above market rates, which means that when the property becomes vacant, if you've got a short lease term, it's going to become vacant earlier. Then the owner of the property realizes that, hey, this property has been over leased, over rented, and now I'm left with a vacant property which I'm going to have to lease at a huge discount, or I'm going to have to let it sit vacant until I can find another really high paying tenant, and I'm going to have to pay them a big incentive as well.